Good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time on this Thursday, February 9th, 2023. Yours truly, Mickey Blindside here with your market memo. Okay, let's begin. So, today we're starting out with a rally. So, there you go. One thing I did want to go over today was our liquidity data. We haven't looked at it in a while. Day by day, it's not really a thing. But once you start seeing a trend or, a good rule of thumb is when you see 4 days in a row of something that usually could be meaningful. And so as I posted earlier, pre-market, yesterday we had the 4th day in a row of declines over advances. So this is our advanced decline line. I track all the junk bonds advanced decline lines for you guys, and I post it on our Discord. That's one reason to join our Discord. It's free. There's no paywalls. It's I open it up completely to the public for educational purposes. So the link is in the description below. You might as well join. Again, you got nothing to lose. It's all free. So anyway, we've had 4 days in a row of declines. Okay, and so we've been in this uptrend now in our junk bonds advanced decline line, but we got 4 days in a row of declines. Usually that means that it's very possible that we could see this line turning down. Okay, now turning down is not necessarily like super bearish. It could mean that the market just pulls back just a little bit. And that doesn't necessarily mean like the bear market is back or whatever. It could. I think if the junk bonds advanced decline line makes another lower low, then that would be a pretty good signal that perhaps the bear market is going to continue sooner than expected. Of course, I think that we are in a secular bear market, but I think we're going to have a mini bull market that lasts until maybe October, November, possibly into 2024, but most likely end of 2023, 2024, or beginning of 2024. I do think that the bear market will continue, but I think we have a little mini bull market in between. But if this makes a new lower low, if the junk bonds ADL makes a new lower low in the next couple of weeks, then maybe the bear market comes a little bit sooner, okay? I don't think so. I think this is going to make a higher low on the next pullback, and if it does, that is going to be a major buy the dip. I just, again, it's not true until it happens. So we have to wait for that confirmation. But already we're starting to see the 4 declines in a row, and now I am looking for short opportunities. Okay, now I'm looking for opportunities to short. I am looking to buy some put spreads. I'm going to be buying probably just S&P 500 or SPY put spreads. Probably dated for April, for the April options expiration. Right now, we're also going through options expiration for February. Next week is options expiration. Also, it's the US CPI report. So I don't want to get ahead of that, because I do think that right now, just based on where we are and just positioning, we could have some gamma squeezes. Right now, what I'm looking at is around 400 or so on SPY. That's probably going to be a floor until February options expiration is over. So let's actually pull up some charts here. Right here. So, after examining the options chain, I think around 400, right around here is going to be support. Just support based on just options positioning. So if it gets to 400 before February OPEX, which is next Friday, I'm definitely going to be swinging long on this, probably as a day trade or something. If it hits 400, I'm day trading. I'm going to be buying calls, short dated, maybe 0 to, let's say 0 to 3 day till expiration, 0 to 3, 0 to 5. I'm going to be swinging calls if it gets to 400. Now, some of the other levels on the triple Q, it's around 290. area. That's the kind of gamma squeeze support around here, 290, and then also too on IWM. IWM has got one too, and it's just over or just under 190 for this. It's like around 189 to 190 area. There is heavy options positioning right there as well too. So those are just options derived floors for this OPEX, only for February options expiration. So this if it's going to go to those levels, it's got to be soon, because after next week, if it happens after Thursday of next week, I'm not gonna play it. Okay, so it has to happen before Thursday. That's 1 week from today. Okay, so as long as it gets to those levels before 1 week from today, I'm swinging long. Okay, very short dated longs. It's going to be a small trade, just a small swing, probably a day trade. Okay, after that though, I am looking to short. Okay, I'm looking to short the market. I'm seeing 4 days in a row of declines over advances. I'm ready to now look at some shorting opportunities. However, I do still want to be patient. I don't want to be going all gung-ho on shorts, because some of our other data points are not turning yet. For example, the New York Stock Exchange high-low line is still pointing up. Okay, it's still pointing up, and let's actually see what's going on in the New York high-low line today. Today it's positive, okay? So it's still curling up. This is still going up. This is the New York Stock Exchange advanced decline line of the New York Stock Exchange. I mean, it's still pointing it up. So that's just one data point, okay? Our junk bonds advanced decline line is just one data point. But again, I'm willing to go with it as long as we get to certain levels, all right? And also this OPEX will have to pass, all right? I'm not going to short before this options expiration. I'm just not going to do it, because I think even though the market doesn't rally, I think we're going to be stuck in a range, or we might just test those gamma levels, and then we might just bounce off of that. And so it's not going to give me enough reward for the risk that I'm taking. All right, I want the reward to risk to be in my favor, so I'm going to wait for after options expiration. And actually, if one is to be really patient and really strategic, again, from yesterday, the chart of the day, US dollar Indian rupee. Okay, I want to see this break out too. If this starts breaking out, if this US dollar Indian rupee chart starts breaking out, I think that's going to be a sign that emerging markets are going to have some dash for cash, and then the dollar is going to go up, and that might cause some volatility in risk assets. So really, junk bonds ADL is one thing, but if I can get the US dollar Indian rupee pair to also break out at the same time, I mean, that would be even better. That would just increase my odds for my reward to risk ratio. So I'm waiting on these confirmation points. And again, from yesterday, this is the chart of the day. If you got to pick one chart of the day, it's going to be the US dollar Indian rupee chart. And if this breaks out, I think that's going to be a signal that emerging markets are going to have a little dash for cash. The dollar might go up, and if the dollar goes up, we're going to see a little bit of volatility in risk assets. Okay, speaking of the dollar, let's see what's going on with the US dollar right now. The US dollar is coming down after it rose for the last few sessions. I can't even find my US dollar chart on my list here because I got so many things on my list now. I got to start cleaning this up. But anyway, the US dollar, I mean, it is coming back down a bit. Let's see where it goes. If it makes a higher low and then makes another higher high, that might be the impetus, and that could happen by next week. So that might be the impetus for the US dollar Indian rupee, and also too, I think if it curls up and makes a new higher high, we might even see an RSI uptrend. And if we get an RSI uptrend, that means a lot of the CTAs and a lot of the algorithmic, trades, the momentum trading algorithms. CTAs are commodity trading advisors. That's the old name for momentum algorithms. But the momentum algorithms might take control, and we might see that. And if that's the case, I can definitely see that US dollar Indian rupee chart also breaking out as well too. All right. Speaking of the dollar breaking out, coming down, is gold Where's gold at? Ah, it's still muted. Very nice. I really want this to come down. Again, metal miners. I mean, I don't know how many times I've talked about metal miners, but I'm still waiting on getting it. Still, I mean, it's been months. We've been waiting for months. So let's see. Let's see if we finally get our chance to get in. Okay. Let's see here. Also, to the yield inversion trade, we've been talking about that. You know, if we see the US dollar Indian rupee break out, we see a dash for cash, and at the same time, we see the yield curve inversion trade unwind. I mean, that could be some serious volatility. We might see a real serious pullback. And look at this, the yield inversion trade. Look at that. There's still money being poured into this. That's crazy. I mean, of course, like I get confirmation on Fridays with the CFTC report from the commodities exchanges. They publish data on market positioning only once a week after the close on Friday. So, and I'll definitely confirm that and tell you guys next week. But just from looking at the yield curve inversion, I mean, look at this. The yield curve trade is still inverting, and so it could still keep going. This trade could still keep getting crowded. And again, for those of you who are just joining us, we've been talking about the yield inversion trade. You can look back in our past, market memo episodes, but the yield inversion trade basically is you're going long on the longer maturities, like the 10-year and the 20-year bonds, and then you're shorting the shorter maturities, like the 1-year, 2-year bonds. So in essence, what you're doing is you're betting on a recession, and you're betting that Jerome Powell and the Federal Reserve is going to cut interest rates because of a recession. All right. And I just don't see that happening in the next 6 months. And I think when the market realizes that, hey, Jerome Powell may not be cutting interest rates because we may not be getting that big of a recession, that's when this yield curve is going to, that yield curve inversion trade, it's going to blow up in people's faces. And I think it's going to happen around end of March, early April. And if we have a dash for cash in emerging markets at the same time, I mean, we might see a major pullback. But that pullback is going to be a buy the dip opportunity as long as our other data points like our junk bonds ADL line, advanced decline line, also our New York Stock Exchange high-low line, all of that makes a higher low. If it all makes a higher low at the same time as this huge sell-off in end of March, early April, then that is going to be a buy the dip opportunity. Okay. I'm not trying to predict the future. I'm just anticipating what could be. I'm just thinking 5 or 6 moves ahead right now. All right. That's what I see. Let's run down some of our positions. Quad U is doing quite well. At least for me, my average buy-in price after all the collar trade executions, the covered call writing, all of that is under $6. I think it's like $5.90 something, or maybe even under $5.90, but it's somewhere around there. Right now it's at $7.54. We're doing really good on this. I'm waiting for another opportunity to sell covered calls on this. If it can bust out of this 8, I don't know if it can get to like $9 or so. I think that would be a wonderful opportunity to sell some covered calls. I'm still in it. Just so you guys see, I have no covered calls on it. What else? Oh, FLNG. We're still in FLNG. FLNG is doing really good today. We're almost at break even again. After we got in, we saw a little bit of a downturn in the tankers, but some tankers are better off than others. It's not tankers, but maritime companies. FLNG is a natural gas carrier. I'm still very bullish on this. I'm still holding on to this. We have January 2025 calls. I should have sold covered calls and collared this off when I first bought it. I was debating that and I didn't. Go figure. And that's the one that fell. And we're in another tanker named SBLK. We're in another maritime name. This one I did actually sell covered calls on, but this one kept running, so I should have chose the other one. But again, that's trading, that's life. It is what it is. This one is also doing quite well. We've got some profits in. Even if I do get assigned on these short covered calls on February 17th, I'll end up just collecting about 15% for about a month and then moving on. So it's not that bad. Either I'm capped at 15% gains, or we drop a little bit and I roll the covered call and I get a little bit more premium, and we'll see what happens. Okay, so that's that. What else are we in? We're still in those UUP dollar index ETF calls for January 2024, not 2025. The other leaps that we're in are all January 2025, except for UUP. UUP, we're on the January 2024 because at the time that was more cost effective. We're still a little bit underwater on this. Again, I did this as a hedge for my Quad U shares, so we'll see what happens. Also, too, remember those FEZ puts, those Euro puts that we bought with our UVXY profits at the end of last year? Those are pretty much disintegrating to zero. Luckily, I only position sized it for the profit that I made on the UVXY puts. So, I mean, it is what it is. It's just profits from one trade. That will go to zero. So that's the importance of position sizing and risk management. Okay, so those are the positions I'm still in. Oh, I forgot CSX. We're still in CSX. January 2025 call. This is performing really well. We're up like almost like 20-25% on these, which is good. I'm still waiting on to sell covered calls on CSX. Still waiting to sell covered calls. I thought it was going to bust out of this box. Maybe not. Maybe it won't. But perhaps we should have sold those covered calls at 32.7 right there. But, you know, shoulda, woulda, coulda. I'm still waiting on this. I still think that it has a good chance of going up. Perhaps maybe next week it goes up a little bit more. I'm not sure. But by next week, if it's around 32, 33, I'll sell some covered calls on CSX, making poor man's covered calls right there. All right. Another position that we're on, I'm still in the Lyra, the market maker vault. I think the rewards come out next week. The first staked Lyra rewards come out next week. So we'll see how that does, and I'll report to you guys how that looks like. But let's get further into the crypto discussion, as we always do around the after we get through the S&P 500 and all the quote unquote TradFi or traditional finance. Okay, so let's take a look at what's going on here. $6.1 billion for Bitcoin open interest. And we're seeing for regular trades versus block trades, more regular trades than block trades. It looks like most of the regular trades were calls bought. Oh no, calls sold. I'm sorry, calls sold. So most of the trades are calls sold. Some calls bought, and then for block trades, it looks like mostly calls are being bought on block trades. Ooh, so some risk taking happening here. Regular combo trades, there's not that many regular combo trades to begin with. Most of the block trades are combo trades. Okay, so we're going to be looking for combos here. What kind of combos? We're looking for strangles. Strangles. So people are betting on some volatility in Bitcoin. That is very interesting. Let's take a look at ETH and see what's going on with ETH. 6.1 billion. That's about what we saw yesterday. So let's see where ETH is at. I believe ETH was also inching up too. It is inching up. It was at 5.1 yesterday. Right now it's at 5.2, I believe. Let's take a look at the regular trades. Mostly regular trades, of course. Retail dominated. And for retail, it looks like they're selling calls for ETH. They're selling calls much more so than in Bitcoin. And then for block trades, it looks like, again, instant block trades are buying calls. There's some risk taking happening. Block trade combos are call diagonals. Interesting. So call diagonal spreads. So possibly they're selling closer dated calls to buy for longer dated calls. We'll take a look and see what that is. Oh, and some call spreads too. So call spreads. So it looks like Ethereum is getting a little bit more bullish. It was more bullish on Bitcoin, I think, a week or two ago, but now it's switching roles. So interesting. Maybe again, this might be the buy the rumor for Shanghai upgrade. We kind of saw this in the summer, in around July, August. Into September for the merge. Remember, the positioning got really, really bullish for that. And then after the merge came out, it was like sell the news. It was buy the rumor, sell the news kind of an event. Will we see that for Shanghai? I guess. time will tell. But let's take a look at some of the block trades. Let's see if we can get some kind of insights into what some of the bigger money is doing in the crypto space. As long as Deribit loads. Deribit's been really slow lately, probably because they get more and more activity as the OI increases. We're still seeing that forward skew on the 1 day expiration, 2 day expiration still for Bitcoin, and then everything else is mostly backward skew. So there seems to be some demand for some calls for the higher strikes. But then longer term, it's mostly the bids are in puts. Let's take a look here. The volatility is actually dropping. Interesting. Let's take a look at some block trades. Okay, so we're seeing some block trades. Not as much though as before. Not as much. Let's see if we can get some insights out of this. That's a spread right here. What's that? 23, 23, bye. That's a strangle right there. That's a straddle, actually. That's a straddle. Same strike. So that's a straddle. So they're betting on some volatility by March, by end of March. Interesting. That is a combined about $300,000 worth of premium right there that was bought. By no means is that a really big trade. I mean, it's bigger, but it's not necessarily that big of a trade. Is there any other trades that we could pair up? Oh, what is this? This was bought. Calls were bought. And so, okay, so this is the calendar call spread right here. So the February calls were sold, and that premium was used to offset some of the costs for the March 23,000 calls. So we're seeing some call diagonal spreads and some straddles here. Let's see if we can get any other insights. That looks to be about it. For Bitcoin. Let's see. I don't see any timestamps that repeat. Yeah, so okay, so there's that. Let's take a look at ETH. ETH, same thing. We're seeing a little bit of a forward skew on the 1 day expiration, but more of an equal smile for the 2 day, but then we got backward skew for everything else. Also, the IV is dropping for the at the money option strikes. All right. And what's going on here? Okay, so we see less block trades. Okay, so we're seeing a little bit less. Let's see if we can get any insights out of this. 1306. What is this? Selling a December 2023 call to buy 3,500 call. So this looks like this is a call credit spread. So they sold this call spread. So that's a bearish position. They're shorting volatility and having a bearish position on Ethereum. Interesting. Okay, and then what about this 209? What is this? This is a buy for March 2023 short-term 1,900 calls for end of next month. Interesting. Is that paired off with something? I don't see it. So that might be a one-off purchase. Okay, so we're seeing $314,000 with the premium bought for March 31st calls. Interesting. So that's a very bullish positioning. So as the data suggested from the previous page, there's a little bit more bullish bullish options activity happening for ETH. A lot more bullish trades happening. So again, maybe it is because of that Shanghai upgrade that's about to come out. So, okay, so that is crypto. Anything else you guys want to see? Anything you guys want to look at? Any questions, comments, rude remarks? This is your time. Going once. going twice. All right, then. In that case, we'll go ahead and wrap up our session of the morning market memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls, of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show some love, baby. All right, I'm going to be back next week. As always, Tuesday, Wednesday, Thursday, 30 minutes after the opening bell of New York Stock Exchange, 10 a.m. Eastern Time. Hope to see you guys then. Trade safe.